Hey guys, welcome back to the channel. I hope everyone is doing well. So we potentially could have a doozy here. So what could kill Defiance and YieldMax ETFs? So first off, I want to thank this kind viewer, Chapupu. That's an awesome name. So hey, iShares just filed for two cover call funds, IWMW and IVVW. Would like to hear your opinion on those. Thanks for the videos. Keep them up. So thank you for this. And just to get off like straight to the point, I like these cover call funds. Defiance and YieldMax, they've done a pretty good job so far for the high yield enthusiasts out there. They come up with some pretty creative strategies, namely the zero DTEs, the single stock ETF covered calls, a portfolio of covered call products in ULTY, and soon to be like the inverse ETFs. So I think they're doing a good job in terms of coming up with new innovative products. They could easily become legends, but I'm really hoping they don't get complacent. They have hungry competitors. I mean, so far Neos and ProShares, like I don't think they have too much different from those guys. They're like for example, like the iSpy, the IQQQ, Spy I, Triple QI. I mean, those are pretty good, and of course, like they have like the Curve Invest products as well, but they haven't quite like taken off like the Defiance with YieldMax products. But I think Defiance and YieldMax should take this one seriously. BlackRock could become a legend killer again. Big Daddy is back, so they can easily outflank and outrank Defiance and YieldMax products. Even though these two cover call products aren't that, I think for most people they're probably thinking, oh well, this it's just like a monthly cover call. Like we've seen those before, and I think like the yields they probably won't be like that exciting. They'll probably be like maybe like 12 to 15%, but I don't think that's the point. They could just remonetize like existing ETFs. Like for example, they already have like IVV, IWM, TLT. Like those ETFs by themselves were pretty good, but then they're doing like covered rights versions of these ETFs, and that's actually pretty smart because then it's like generally less administrative expenses because they're just reusing their own products, and they have a lot of products. So all they have to do is like pick and choose like certain ones, remonetize them by like just like selling covered calls on top of them, and they can easily just like flood the market. So I think these are just like kind of like the testing ETFs. Like for example, they'll probably see if like the market reacts to these favorably, and I think they will. Now again, on the surface, like they're just monthly covered calls. I mean, that's not as exciting as like weekly covered calls or zero DTE covered calls. But what if they send in more? What if they do zero DTE version of this? If that's the case, Defiance and YieldMax, they have a serious problem. And just look at this, like the price is definitely right. If you look at the no, closer to the bottom, IVVW is going to charge 25 basis points, and for IWMW, that's 39 basis points. These are, if I recall correctly, I believe so far this is like the lowest expense ratios for covered call ETFs. I forgot. I should have added like TLTW, LQDW, and the HYGW to this as well. But I think most people will probably get the point. You can look this up yourself later. And of course, I think like for bond ETFs, like people probably aren't like that exciting about those. So I think people will probably go for like the equity cover call ETFs like first. And just like personally, I think that's a mistake. I think you should also like consider like the bond ETF cover call products as well. But that's not the point of this particular video. Look, let's be fair. The Zega, advised funds like the Defiance and different YieldMax products so far, I mean, 2.6 billion is nothing to sneeze at. But look, let's be honest here. BlackRock has 2.7 trillion assets under management. So you're not dealing with like the 900-pound gorilla. You're dealing with King Kong here. And when they see money and they want to go after that, like the remaining competitors, or I think you should be rethinking your life choices here. And BlackRock is stone cold. They have no problem killing their own ETFs. Like I've seen this before. Like they have no problem killing underperforming ETFs and then like just like putting money into like different and newer products. So look, let's just use like the recent example of like the Bitcoin ETFs. Right now, as far as I'm concerned, like they pretty much won the Bitcoin ETFs. Now all they have to do is just like maintain their lead. So, like first, like the Bitcoin distraction was over. So I think they were probably putting a lot of attention and marketing behind like the Bitcoin ETF to get it off the ground. And now they can focus on more option products. Because just like think about the future, IBIT, they're working hard behind the scenes to get like options like listed on the IBIT themselves. So eventually, we could probably see like IWVW or something like that, whatever their version of like the Bitcoin cover call ETF will be. So, and I'm really looking forward to that one. And I'm pretty sure they will come out with that. It's just a matter of time, and it's just like getting like the SEC to finally prove it. So again, they'll probably get the lawyers, accountants, whoever they need to get that done. And again, thank you to the Bitcoin Magazine Twitter handle for providing this post, because this is shocking. MicroStrategy took 4 years to accumulate 205,000 Bitcoin, and just within a few months, I mean, since January, BlackRock has been able to surpass MicroStrategy, which is pretty shocking, to accumulate more than what MicroStrategy has. So, you know, just anyone in particular, like it's not just like Defiance and YieldMax. If BlackRock decides to go after something, just be careful. So just to kind of sum it up, BlackRock obviously has more experience. They have better polished professionals. There's definitely more transparency. Now, and that's actually pretty surprising because YieldMax has a pretty good like website in terms of like listing like the different the different trades. In fact, like there's quite a few YouTube channels just like making videos just to including this one, just going over their trades. And their website is in terms of like trade transparency is already pretty good, but in my opinion, the BlackRock has better. You could just go on the website and see for yourself. I like their spreadsheets actually a lot more than YieldMax, and that's saying something. And they definitely BlackRock has a deeper bench, so this could just be the start. I mean, so including these two, so I believe they have like altogether 5 cover call ETFs, and if this is just a start, then watch out. And my guess is that they'll probably attract less like high yield riffraff. And I don't mean to like slight anyone, but sometimes I think like Defiance and YieldMax, like the supporters, I think they're probably on the more inexperienced side. Um, and I think maybe they're starting out. So and again, I don't mean to slight anyone, but they're probably attracting traders that are probably on the newer side, and they might be a little bit more naive. But then as soon as they realize like that, what BlackRock is doing, I think they're gonna start sucking up a lot of the money. So the risk, of course, with any ETF, we don't have any control over the options track selection. The implied volatility could collapse, but BlackRock can definitely survive like a low volatility cycle. The yields won't be consistent month to month. If you like this type of content, please consider giving this a like. All subscriptions are welcome. And just as to kind of like go back to the slide, I think liquidity will definitely be key. BlackRock's definitely testing the waters here, and if there's anyone from like YieldMax or Defiance, Zega, Tidal, whoever, I really think you should consider maybe some expense ratio cuts, or at least like some rebates, if you want to retain like your current like investor or trader base. And YieldMax in particular, please consider getting like those inverse ETFs ready. I think that will really help the fight against BlackRock. So, well, I guess like no matter what, good luck to all the competitors out there. I'm sure investors and traders alike, they'll appreciate like this high yield war. I think whoever winds up winning, I think we stand to benefit. So thank you for watching. I hope people make some good money out there, and I'll see you in the next video. Bye now.